Sometimes you think some CEOs have really been given hospital passes. And Angelo Swartz, who's the CEO of SPAR, has had 2 years in the job, and it's been tough every single minute, it seems. But he's cleared the decks. The exits now have been concluded from Poland and Switzerland, which were bleeding. The rest of the business seems to be settled. We'll find out from him today what happens to SPAR 2.0 under the Swartz era. Thanks for joining us, Angela. Your financial results out today for the 12 months to the end of September. And boy, it's not often one sees such an ugly set of numbers, 4.8 billion loss at a headline level, but there's a very good reason for it. You tell us why.
Yeah, Alec, I mean, thanks for that very kind introduction, I think. But yeah, a difficult year for SPAR. We've had to make some really difficult and strong decisions. The exit of the European businesses meant that we recognized some write-downs in the goodwill of those assets and the value of those assets so that we could exit them quickly, which we've now done and is behind us. Thankfully, those impairments are largely non-cash. And so we were able to recognize those impairments while reducing our debt and keeping the continuing operations going fairly nicely.
Yeah, the good news part of these results is the debt falling very sharply. Has that been part of your intention from the day you took over?
Yeah, so I think the day this management team took over, we kind of articulated 5 key short-term priorities. And those being, one was the reduction of the debt, the other was the exiting of Poland, and the third key one was figuring out how our European portfolio fitted into the long-term picture for the group. I think we've signed off on all 3 of those now, and then a key part of that was in ensuring that the business was at a sustainable level of debt for South African business. The levels of gearing, or the appetite for gearing in Europe, is a lot higher for the appetite for gearing in South Africa. Obviously, a lot of that related to what the interest rate across the geographies look like. But yeah, the reduction of debt is a big part of our story, and was a big driver for some of our decisions. Yeah.
How did SPAR get involved in such big assets overseas in the first place? What was the strategy at that time?
So it was more opportunistic. And so in 2013, the opportunity came up to buy SPAR Ireland. And as you would know, and it's well publicized, that was a fantastic acquisition. We entered into that market. It was quite an expensive acquisition for SPAR, but it's paid dividends, and it's really done, or pardon the pun, but it's really gone well and added value to our stable. I think with the success and turnaround in that business, it was the view of the management team at the time that more opportunities like that would be great for the Southern African business, and we entered into Switzerland. The Polish business very quickly showed that it was not a worthwhile business to be in for a South African business. But the Swiss one was a more complicated story. I think at an operating profit level, the Swiss business appeared to be profitable, but the reality was the level of return relative to the amount of debt we were carrying in that business just made the hurdle rate to make that a worthwhile investment much too high. And so that was probably the hardest of the decisions we had to make. You know, at an operating level, that business appeared to be making money, but it was really not a worthwhile allocation of capital, particularly for South African business.
It's so interesting that. So you had a success offshore first with Ireland, and Ireland is still in your portfolio, and presumably you're keen to keep it, but that maybe lured you into doing other deals offshore. And I say you, meaning the SPAR group as a whole, that haven't worked out that well.
I think that's true, Eric. Very much so. I think that the Irish acquisition went really well, and to some extent, um, maybe created a false expectation of how easy it would be to do business in Europe, and that's turned out to be the case.
And when you have a look at what you've still got left over there, the fact that Ireland is still in the portfolio, clearly it must be easier because it is profitable. But is there a structural issue there that was not going to be ever apparent in Poland and Switzerland?
No, I think the core difference in the Irish acquisition was really that we took over a business that that whilst it had a struggling balance sheet, had a very strong management team, and really just needed some balance sheet strength to unlock the underlying quality of that business. And so when we stepped into that business, the management team were able to use the flexibility being part of a big listed organization gave them to unlock opportunity. And I mean, what we've been able to do when we took that business over in 2013 or so, it was netting under 1.5%. It now nets comfortably over 3%. So double the operating profit in relative terms, and was able to expand and diversify quite broadly. It's now no longer just a wholesaler. It also plays a fairly significant role in the food service sector in Ireland. 13% of that business is now part of our food service business, or our food service business, 13% of the broader Irish business. And that's a really profitable business to be in. And then a fairly big cash and carry business to independent retail, unbranded independent retail has also been an area where we've been able to add value. And so that's developed over time. I think the key differentiator for us with Ireland is that it's a business of scale. And so whilst in absolute terms, it's not the biggest business relative to our Southern African business. If you think about Ireland with a population of 6 million people, it's a business that has scale in that country, in a macro economy that's growing quickly. And we think there's more value to unlock there in the next few years.
And what about the other assets that you have there? And I think the important thing for shareholders is are you now drawing a line underneath the European losses? In other words, you still have that business, Appleby Westwood, sitting in the UK, which is held for sale. Is that being accounted for, or as the banks would do, they would actually have provisions against it?
Yes, so, Alec, I mean, that business holds no debt. And so we are in the process of completing a disposal there, and I'm hoping to complete that early in the new year. And once that disposal is complete, that'll be our portfolio cleaned up entirely. We have impaired that business to zero, and so I don't think there's anything more for shareholders to be concerned about. And then the portfolio will be Southern Africa and Ireland. And then we've got the small joint venture that's being run by a local partner in Sri Lanka.
Looking at the Southern African operations, it's a tough market. In the past week and a half, I've interviewed the CEOs of two big American companies, Walmart and Amazon, who are coming into this market. We've heard so much about Checkers. We know Sean Summers is back at Pick and Pay. It's not an easy place to do business. Woolies, of course, has always been a very strong competitor. We saw your numbers in South Africa, very modest growth. Is with this distraction out of the way now with the international operations, is this going to give you a bit of turbocharging locally? Because I guess you need it with the competition that's around.
Yeah, so Alec, I think we will definitely be able to focus our energy entirely on the Southern African business now. And that really is our plan for the next 2 years, to really refocus and recharge the Southern African business. Our growth was modest, although H2 much stronger than H1, which was gratifying, but still not at the level of growth we'd like to see. We do think we play in a different segment of the market to many of our competitors, and our business is fundamentally a different one, in the sense that our core business is that of a wholesaler as opposed to a retailer. And so we work in the service of independent retailers across this country. We think we play a vital role in the economy of South Africa. South Africa needs more entrepreneurs. And our ability to support those entrepreneurs is something that we're exceptionally proud of, and allows us, and through our model, for our stores to be customized and personalized for the communities they serve. And I think we'll continue to focus on that as a lever for growth.
Not all entrepreneurs, though, appreciate the role that you play. It's been well documented, the one family that has you've had great difficulties with. What happened there, and what have you done to make sure that it doesn't recur?
Yeah, I think, Alec, I mean, it would take much to time, and there are still some legal battles to be fought there. One in particular that we declared as a contingent liability on our financial statements. But despite all of that, the family continued to do business with us, and we're hoping to rebuild a strong relationship with them. I think that the matter that's before the courts will decide, and I think we'll find a fair outcome, and I'm sure the courts will find a fair outcome there. But beyond that, very happy to still have the family and the brothers in the fold, and hope to grow our business with them.
Michelle's the mom who traded in her Fiat 500 for this beast right here. But why the momentous move, huh?
I needed something bigger to keep up with my growing son and his many sports bags.
When you traded in your car with We Buy Cars, was it an easy conversion?
I see what you did there. The process was just so easy. I was given a tablet, had to sign, and that was it.
Basically, We Buy Cars is no mess, no faff. Okay, it was nice chatting. We Buy Cars, the easiest way to sell your car by far.
We're getting quite a lot of good news coming out of South Africa with green shoots, but I can see, as far as you guys are concerned at SPAR, it certainly hasn't hit your revenues yet. Are you seeing any improvement towards the end of the financial year?
Alec, I think, H1 was tough for us. Revenues in Southern Africa up 1.1%. Obviously very challenging first 6 months. H2 has been better. So H2 above 3% in SA, which is something, it's nowhere near where we want to be, but certainly an improvement on H1. And we continue to see improvement. And so I think the next while hopefully will be quite positive for us.
Are you seeing foot traffic, though, for instance, improving in your stores?
We are seeing foot traffic probably stay at roughly steady, Alec. Maybe slightly down, but immaterially so, with baskets slightly up. So basket size is up 3% or so.
I suppose the interesting part of the whole retail story at the moment, though, is the convenience angle. I see that your deliveries were up 135%. Checker 60/60 going great guns. Walmart bringing that in as well. Is that cannibalizing the stores?
Alec, I mean, our number is off a low base. And so the level of cannibalization in our system has been relatively low. It's hard to imagine that it hasn't cannibalized feet in general across South African retail, and that it's impacted in-store volumes. I think I'd be naive if I didn't say that, but I think it is an opportunity for growth, and it's an exciting story for consumers. I think the amount of choice they have out there now. And that's something that we all as retailers should be embracing. Our consumers have more ways in which to deal with us now. And so we've got to embrace that and give them as many opportunities to engage with us. And in our case, we've chosen to. So we've created our own version, SPAR EU. As you mentioned, strong growth in that business. But then also Uber Eats has been a really exciting addition to our portfolio.
How's that worked with Uber Eats? How exactly does it work for the consumer?
It's actually worked exceptionally well, Alec. So there's no additional delivery cost, but the goods are priced up on the app to compensate for the cost of delivery. Consumers have really jumped on that, and it's worked really well. And I think it creates a space in the really quick commerce space. And a standout is that Uber Eats is able to deliver between 15 and 45 minutes, which is it's quite scary that we start talking about how long it takes to deliver in minutes rather than hours. So quite phenomenal from them, and obviously a great technology stack on their side, and really happy with the partnership. I think Uber Eats have been really good and add a lot of value into the SPAR system. And we've been able to do that without cannibalizing the SPAR EU volumes either.
And you've had a really tough start to your career as a CEO. In the 2 years, you've really been busy fixing things up. What does 2.0 look like for you? What are the years ahead? Because you're still young, 45. You got a couple of decades possibly still running SPAR.
Yeah, not quite 45 yet. Next year, so I'm going to hang on to that for now. I think SPAR is a business that's immensely important to me. I've been in this business for it'll be 19 years soon. Really been a business I've been part of through my formative years. It's a business I really care about. And I think it's a business that really has the potential to add value to South Africa and to South African society. As I mentioned earlier, I think South Africa needs more entrepreneurs. And we have a business that is based on the concept of supporting South African entrepreneurs. And I think the next while for us is just refocusing on that, providing the best support we can to independent retailers in this country, and finding more categories to apply what we know about that particular subject, and pet being the first of those categories. But I think over the next few years, looking for more opportunities in the sector where independents need the support of a strong wholesaler under a single brand. I think that's something we do exceptionally well. We've done it in liquor with Top, certainly the best known liquor brand in the country, retail liquor brand in the country. Build it. Our building material supply, a strange place to apply this logic to, but it is the biggest building material supply in the country. And in groceries, I think we often misunderstood by the consumer, but the reality is that we are the second biggest grocer in this country, all on the back of independent retailers with a strong wholesaler behind them. And I think there are more opportunities to roll that out.
So in essence, the way the SPAR model works is you get guys who are really good shopkeepers, or in the case of Build It, good building materials traders, and you supply them with product, you support them, and you bet on them to beat the big corporate stores.
100%, Alex. So, I mean, the SPAR model is based on the idea that through united cooperation, we all benefit. And so through a wholesaler who coordinates the actions of independent retailers by, one, selling them goods at competitive prices, but two, creating brands and marketing them so that they compete with corporate chains. That is the essence of our business.
Looking ahead in the year to come, what are you telling investment analysts to expect?
I think that the recovery in our Southern African business continues. It's a lot more focused story in South Africa now, with, as you mentioned earlier, with the European exposure largely having been dealt with. We now want to focus on the Southern African business and modernizing and digitizing the business. So the continuation of our SAP rollout, now that it's settled in KZN, going into the next distribution center. And that modernization and digitization is going to unlock more opportunities. And so we expect to continue seeing an improvement in our operating margin. So we are up from just over 1.5% last year to 1.7% this year. And next year to ratchet that up even more. And to get back to 3% by the end of 2028.
And lest we forget, you were also the man in the hot seat when you took over of KZN provincial operations of SAP. So you've certainly been given a few hospital passes. But you must be tough, Angela. You're bouncing back now.
Look, as I say, it's a business I love. And that does make things a lot easier to deal with.
Angelo Swartz is the Chief Executive of SPAR. I'm Alec Hogg from BizNews.com.